Hello friends, we will discuss now the tax proposals of the budget 2022 which has been presented by our finance ministers on 1st February 2022. Before we start the presentation, I would like that you please subscribe to our channel Tax Acharya. Also, if you need the copy of the presentation, please provide your email ID in the comments. We will provide you the presentation copy for your reference. First, we would like to go through the direct tax proposals. There was no change in tax rate, either for corporate tax or personal taxations. In the screen, you can see the tax rates for all the categories of corporates and different slabs for individuals. Compared to last year, there was no change. The only change is that the maximum surcharge in case of long-term capital gain and AOP is now restricted to 15%, which was earlier go up to 37%. Now we'll go through the TDS. In the TDS, there are 4 changes which you can see on the screen. First, I would like to provide you the input that the definition of the specified persons has been amended to reduce the period of non-filing from 2 years to 1 year. Thus, if the vendor has not filed return for 1 year, then TDS rate will be deducted at double rate, which was earlier 2 years, now it is 1 year. So you can download the report from the reporting utility and see whether your vendor has filed the return or not, and accordingly you can charge the TDS rate. Also, introduction of section 194R, where TDS required to be deducted at the rate of 10% on benefit or perquisite of a business or profession. So if I'm running a business and I'm providing any perquisite to any of my distributor or any of my customers, whether in kind or in cash, anything, then I require to deduct 10% TDS on that, and accordingly the recipient required to declare that perquisite or benefit in his return of income. Further, 194F has been introduced, which is TDS at the rate 1% on virtual digital assets, which we will see in the next slides. And also TDS on sale of immutable property is now deducted on the higher of stamp value duties or sales consideration, whichever is higher, accordingly TDS required to be deducted. The most discussion point in this budget is the introduction of the virtual digital asset. Virtual digital asset is a concept and it can be defined in a number of ways. But right now we'll see what income tax has provided. Income tax provided section 247A. It's a new section which is discussed and is satisfying all the below conditions. Now, what are the conditions you have to satisfy to be a virtual digital asset? Any information or code or number or token and which is not currency. So it may be any information or code, number or token generated through cryptographic means or otherwise, means anything, can be transferred, stored or traded electronically. So anything which you can transfer, anything which you can store or anything which can be traded are all will be there. Now, what is point number 1? Provide a digital representation of a value exchange with or without concession with the promise of representation or having inherent value, functions as a store of value of unit account, and the next is a non-fungible token or any other token of similar nature by whatever name called. So the purpose of the government was uh, to provide tax on cryptocurrency and NFT. Okay, but if you look like the definition, it actually has covered a number of digital assets which you and me are using in the present world, like credit card points, uh, value which we are having on the online games, Also, if you use the metaverse, so if we are using the metaverse, go to the world and why we can use digital currency to buy any goods. So that also being covered under virtual digital assets. So this required clarification from the government that which asset particularly the government want to tax, they can bring that, okay, cryptocurrency and NFT. But in the case of any clarification, all this what you called personal things are there, which now may be covered under this. There are few interesting things which we can note on this is that right now, this if you are buying any cryptocurrency or NFT, you treat them as a capital asset, and you treat them as a capital asset at the time of transfer. It will be raised to a short-term or long-term capital gain. If it is a long-term capital gain, it is taxed at 20%, and also you are eligible to get Section 54F benefits or 54EC benefits. But now, with the introduction of 115 BBH, there is a flat rate of 30%. So what are the below table provide a summary of all this. So the tax rate is now 30%, plus surcharge and cess you have to pay. You will get deduction only for the cost of acquisitions. No other expense is allowed. Set off losses is not allowed. Carry forward loss is not allowed. And basic exemptions like 87A is there, what we called the 12,500 to the individual, that is also not allowed. Please note that they have not mentioned about section 80G. So in the, 80C, chapter 6A. So in the case you want to claim 80C deductions, you can claim that. TDS is 1%, and you can pay the TDS without having 10 also. And if you are receiving any gift, then if you are receiving what you call VD as a gift, then more than 50,000 is taxable to the recipient. Now we come to discuss what are the new disallowances which were introduced. There are 5. The CES education cess, which was a CESA Goa case, has been make it allowable. Now is no more there, and it is being a retrospective effect from 2005. So from 2005, if you are claiming any cess as expenditure, the government can reopen the case and they may disallow. Rule 8D is now applicable, even in a case when no exempt income is earned. So for a particular year, you don't have any exempt income, still you have to disallow related expenditure under Rule 8D. Penalty for offences under foreign law is no more allowable for deduction under Section 37(1). Earlier, we used to take a benefit that what is penalty is what we call under Indian law. We used to take, okay, something you pay penalty, you may have a branches, or your employee may move abroad and you require to pay some penalty for any of the breach of the law of that respective country. So that we used to take care, but now penalty or offences under any foreign law is not allowable deduction under Section 37, and please note that this includes lawyer fees also. Conversion of interest liability into debenture is not an allowable expenditure under Section 43B. So earlier what we used to do, we convert interest liability into debentures. Now the government said it is not a payment of interest, and hence you cannot claim under Section 43B. Also, what they have declared that the concessional rate tax on foreign dividend, which is 7.5%, is no more there. Now it is required to be taxed at normal rate, which may be 22%, 25%, or 30%, whatever may be the case. Accordingly, it will be allowed. The next one is that we will discuss now few allowances which government has introduced. So if for COVID treatment, if the employee is receiving any money from or the employer is taking care medical treatment for COVID treatment, now that is not forming part of salary. Also, in the case of deceased employee, if the family members are receiving any amount from the employer, then that is also not taxable, and from any other person up to 10 lakh is exempt. Also, reduction of goodwill from books of accounts is a deemed transfer. So even though what you call you reduced, you have a goodwill and now when you reduce the value, you can reduce the value and that will be treated as a deemed transfer. If the deemed transfer happen, you can take the benefit of capital gain loss. And insurance taken on differently able persons by parent or guardian eligible for deductions under section 80D, even in the case with such payment entry is available to differently able persons during lifetime of the patient or guardian or attending the age of 60 years more. So this is the amendment made under section 80DDB. Now insurance is also covered under that. Now we will talk about the few new processes which has been introduced in the budget. In order to report any income which has not been offered to tax, a new updated tax return has been introduced which can be filed within 2 years from the end of the relevant assessment year. The additional tax shall be 25% of the aggregate of the tax and interest payable. If return is furnished before completion of 12 months from the end of the assessment year, however, this shall be 50% of the aggregate of tax and interest payable if the return is furnished after expiry of 12 months but before completion of 24 months from the end of the assessment year. When for a particular matter which has been declared in favor of the assessee by the tribunal or jurisdictional high court and revenue has challenged the same in the case of the assessee or another assessee before the high court or Supreme Court, the revenue can defer filing of appeal before ITT and high court in the case of other taxpayer for same questions of law subject to prior approval of PCIT. So the first one is that they have reported something called updated tax return, that in the case you have missed to file your return, or in the case you want to file a revised return, you can do that, but subject to payment of few additional taxes. And also, if the case is in the favor of assessee and it's now pending before the higher authority, then department not required to reopen all other years, and this will give a relief to the assessee. Facial assessment scheme which says that if procedure is not followed by department, then assessment is void. So if the department is not following the process, then assessment is void. Orders passed by the TPO are proposed to be covered under section 263. So now PCIT also can reopen the case under transfer pricing. Also, the faceless ITAT and other judicial proceedings are deferred till March 2024. Now, we'll have a look on the mergers and acquisitions. There are 2 points which are bringing up, that assessment or other proceedings pending or completed on the procedure in the relevant of a business recognition shall be deemed to have been made on successor, and entities going through business reorganization to be enabled to file modified return within 6 months from order of relevant authority. With that, we have covered all the important data tax proposals. Now we will have the look on the GST proposals. So earlier the matching mechanism of ITC has been introduced, the two-way that, okay, a form, something called 2A or 2B will be provided to the taxpayer for input credit, and input credit taxpayer required to accept, reject, or keep pending for each line of input credit. Now that has been, they have not enabled for the last 2 years, so that has been removed from the section. Also, the time limit for claiming input tax credit, which was earlier till September 30th was there, now extended to November 30th. Now, as I said earlier, the two-way matching concept has been removed, and in place of that, updated new form, something other than 2B, will be introduced. It provides that taxpayers shall get an additional auto-generated statement which shall contain details of input tax credit. The said statement shall be made available electronically to the recipient. Further, the new additional auto-generated statement shall be divided into two parts. Details of inward supplies in respect of which ITC may be available to the recipient, and details of supplies in respect of which ITC cannot be availed, whether wholly or partly by the recipient, based on the details provided by the supplier in the GSTR1 listed by below. Newly registered taxpayer, regular continuous defaulter, defaulter of sale assessment tax, supplier of availing excess ITC, supplier utilizing excess ITC, any other prescribed. So it means now we will get a new form which will say that, okay, you have input credit is 100, but will allow you only 60, and they will provide the reason for not list of the vendors for which you can't claim 40, and this for this it may be for it may be a new taxpayer or a continuous defaulter. I don't know who has drafted the law, but I'm surprised because right now, if you are a continuous defaulter, you cannot file GSTR1 also. So if I'm a continuous defaulter, I cannot file GSTR1. Then how what you call question of disallowing the same in new GSTR2B kind of form is there. Anyway, let's see when the form will be released. We'll have a look on that. The list of ineligible ITC as mentioned in GST 2B would not be allowed as ITC from the notified date. However, such ineligibility is linked with supplier's default, which is practically out of the recipient control. It also adds an additional responsibility to have regular check on the supplier compliance for ITC availment. Introduction of this amendment fortifies that ITC cannot be denied in the past for similar grounds. There are some few other things are there. So as I mentioned that time limit to claim ITC is now extended to 30th November from 30th September, and also same is for issuance of credit note and to do any rectification in the GST return. Refund claim of any balance in the e-cash ledger, which was not there earlier. Suppose you paid extra, or you having some e-balance, some cash balance in your e-cash balance, you can claim a refund for that. Transfer of amount available in electronic cash ledger of one GST to another electronic cash ledger or another GST having same PAN. So suppose you're having cash balance in one GST number and another branch having has sought, so you can transfer the fund from one ledger to another ledger having the same PAN. And now the interest rate is applicable flat 18% on all different kinds of act. With this, we have provided you the input of the important GST proposals. In the case of any query, I request you to please write your query on the comment box, and also in the case you need the copy of these presentations, please drop the request with your email ID on the comment box. We'll provide you the copy of the presentation. Thank you.